Jeremy Howard from Crew. Thanks for clicking in. I want to tell you why we recently published a report in which we said that fine wine was as good as gold in protecting investors against future inflation. As always, this video is based on a longer research note which you can download from our website free. There's a link in the comments section below, but let's get straight to it. What we were struck by when we looked at the relationship between gold and fine wine over the last 20 years was the extraordinary correlation between the two asset classes. As you can see on the graphic, they've moved pretty much in lockstep for the last 20 years. Both provided exceptional downside protection during the global financial crisis, selling off only marginally and making new all-time highs very shortly afterwards in 2010-11. And then during the very low inflation environment that we've had over the last few years, both fine wine and gold have tended to drift sideways, not losing value, but not going up dramatically either. But then what we've seen in the last year or so, as government printing presses around the world have gone into overdrive, we've seen investors starting to move back into gold. You can see on the far right of the graph there that gold's had a pretty solid run over the last 12 months or so. Fine wine is yet really to respond, and this is one of the reasons why we believe that 2021 is going to be a good year for fine wine, as it starts to catch up with gold as an inflation hedge. And of course, gold and fine wine share a lot of the same characteristics. Both are relatively fixed in supply. But of course, supply being fixed is a relative term. When we look actually at the supply of gold over the long term, we can see that the supply of gold has actually gone up quite a bit over the last 100 years. In fact, it's up about 300% since the year 1900, as new discoveries and better extraction techniques have come to the market. The supply of fine wine, on the other hand, if anything, has gone down. If we look at the supply of Lafite Rothschild, for example, yes, it is true that some large Bordeaux estates can acquire new parcels of vines and slightly increase their production that way. But then they also now produce second wines, third wines, and the actual production of the Grand Vins probably hasn't changed much in 100 years. And of course, on the secondary market, individual vintages of wines like Lafite Rothschild decrease in supply dramatically as they're consumed. We did some analysis recently looking at every vintage of Lafite back as far as we could in time, back to 1812. And we found that while you could buy reasonable quantities of very recent releases, once you went back more than about 15 years, it was very difficult to buy anything more than 2 or 3 cases. By the time you get back to the great vintages of 61, 59, 47, 45, you're talking about a handful of bottles available to buy on the secondary market. That's how steeply decreasing the supply curve is for fine wine. So when people say that fine wine and gold are both fixed in supply, yes, it's true up to a point, but fine wine actually has by far the better supply curve. And of course, as that supply decreases, the price of any vintage of fine wine will increase commensurately. And we see that with back vintages of Lafite. As the scarcity increases, so does the price, up to the point where very old vintages can attract almost ridiculous seeming prices, because as I said, there are literally 1, 2, maybe 6 bottles available anywhere in the world, and for such huge names like Lafite or Domaine Romanée-Conti or any of the other great wines around the world, demand is almost infinite. Fine wine and gold also share the same negative characteristic. Neither of them has any current income. This was much more of a drawback previously. Today, there are 17 trillion US dollars of global bonds which have a negative interest rate. you actually lose money year on year buying these bonds. So when you set aside the cost of storing and insuring fine wine against negative yielding government bonds, fine wine starts to look a lot more attractive. And in fact, when you compare fine wine alongside gold, what you find is that fine wine is actually cheaper to store. We looked at storing $500,000 of physical gold or physical wine. Storing the wine with Cru in Bordeaux on a fully insured professional storage basis costs around 19 basis points a year, 0.19%. Storing the same value of gold in London silver vaults costs around 25 basis points. So wine is actually cheaper to store than gold. So putting all this together, we felt very justified in our assertion that fine wine is as good as gold in terms of providing an inflation hedge for investors. And that's why we continue to argue for a small weighting for all investors in fine wine as they seek to prepare their portfolios for an uncertain future. Thanks for watching.